Well, good evening, ladies and gentlemen. My name is Lynn Gardner. I want to welcome you to the Truth About Money call. We're going to be talking about how to, get out of debt, build wealth, and do all that without making more money. So we're so glad to have you with us here this evening. I always ask two favors before we get going with this call. And the first one is to pay close attention to what I'm going to share with you. Now, you might be saying, why would she say that? Well, because I'm going to give you a whole lot of information in about 20, 30 minutes. And so I want you to, just kind of clear your plate and pay attention. And then the second is to keep an open mind. Listen, I don't know what you're going to do with what I'm going to share with you, but I know one thing. I guarantee you'll be compelled to make some changes when it comes to your finances after we take a look at what we're going to be looking at. So you'll be compelled to make some changes. But yeah, why would I ask you to keep an open mind? That's pretty simple, because I'm going to share some things with you about money that you may never even thought about before. And I'm going to offer up a solution that you may never even heard of before. And you see, you've been conditioned to think about money the way you do. In fact, you've been conditioned to embrace debt like a long lost friend. That's just where we are today, right? So when we have a paradigm shift, and that's what I'm going to try to do as I share with you tonight, the mind is inclined to close like a steel trap. So I just want you to, keep that thing open for about 30 minutes. And I think you're going to be pretty amazed by what you hear. You might be asking yourself, by what authority is this woman coming to us tonight? Well, I just want to set the record straight. I'm not a financial advisor. I'm not a CPA. But what I am is I'm well versed in real estate and investments. I spent 18 years in the real estate auction industry, and I can tell you, I've seen it all. When debt, wealth, profit, loss, everything in between. And so really, I'm more like a market expert, and that's the way I'm going to approach things with you tonight. But change happens. It usually doesn't happen overnight. It happens very slowly. And just like that science experiment, with the frog in the pot, and you turn up the heat, that poor thing could have jumped out long before it realized the pot was hot. And really, that's what happens to us in life. Change happens, and we don't realize that we've gotten far off track. We're just one generation away. I should speak for myself here. My dad was a teenager during the Great Depression. So it's one generation for me, might be two for you. It doesn't really matter. Things have changed. People didn't used to use credit cards to float life. They bought homes and they stayed there. They may have bought a starter home, as a couple, and then maybe they bought a larger home for their family. But once they did that, that was the family home, and they stayed there, and paying off their debt was a priority. It wasn't something they wanted to take their time doing. They wanted to be debt free. They retired when it was time to retire. If they were so inclined, they had no debt by that time, and they had planned for things. And so they had the luxury of being able to retire if that's what they wanted to do. And they had something left over at the end of the day. They left their homes. Perhaps you've been the benefactor of an estate, an aunt, uncle, grandparents, parents, whatever. That was important to them. I don't know if it's important to you. It's important to me to have something left over for my family at the end of the day. So we're just one generation away from all that. Today, we use credit cards to float our lives. We buy a home and we change it like we change cars, every 7 years for most people. Paying off debt is not a priority for us at all. All we focus on is that interest rate. What's the payment? And that's it. We don't care if it's a 50-year mortgage, as long as we can make the payment. Most of us can't retire. After the bubble burst last time, a lot of people took a hit. But the bottom line is we've got a lot of debt, and we've, don't have enough savings to retire. So that's one generation away. Things have dramatically changed. So where are you? Well, we know that everybody on the planet understands the importance of money. We know what it's like to have it. Most of us, and some of us know what it's like not to have it. I've certainly been there in my life. We've been conditioned to strive for a high credit score, man. Like that's the biggest achievement and accomplishment in life. And really the only purpose of a credit score is to go get more debt, right? Outside of getting better rates on things like insurance. But it might be of interest to you to look at the right side of the screen. We think credit scores, it seems like that whole process has been around forever and ever, amen, but it hasn't. Really they were born, that structure, if you will, was born in 1989. And before that time, lenders, loaned money based on your character. Today, they judge your character based on your score. So things have really, really changed in just a short time. But, most people do believe that you need to make a whole lot more money to build wealth. I think all of us want to build wealth. We all say that, right? Who wouldn't want to build wealth? And so but we think we need to make a bunch more money. And it's kind of like something I'll do someday if maybe I get more money kind of thing. But the truth is, it's how you spend the money you already have that makes the difference. And that's the key to not only being out of debt, but also to building wealth that we're going to show you. There is a problem with that whole mentality of one day if I get more money, if I win the lottery, if I get, get an inheritance or whatever. There's a problem with that more mentality because see, a lot of people have seen success and what happens when they start making more money, they just raise their standard of living. The debt load usually gets bigger because they're qualified or they have the ability to borrow more and more money, and they have the ability to repay it at least, in the moment. Many of them never build wealth, though. That's the bottom line. See, they get bigger cars and bigger homes and bigger toys and bigger vacations. They spend as fast as they make, and they never build the wealth. And so, you know what? Everybody here in America, especially, is just one mishap away from disaster. Now, you might say that's ridiculous. That couldn't happen to us. So don't say that. I said that once upon a time too. But if you get death or debt or divorce or any kind of tragedy in your life that changes your financial picture, you could be one mishap away. It's just not a good idea to float that. There's a wealth mentality. You may not be aware of that, but wealthy people value money. And, they'll be the first ones to bend over and pick up a penny on the ground. And that's the truth. I've been eyewitness to it. Maybe you do that too. I do. But, most people wouldn't even bother to bend over for a penny, but wealthy people do. You see, they value money. And that's the problem that you see, frankly, when you see maybe somebody does win the lottery and 20 minutes later they're broke because they never really learned to value money. Wealthy people only use debt to leverage, to buy, use somebody else's money, so to speak, right? To leverage into more investments. Then they reduce debt very, very quickly, as fast as they can. Why? Because they want to leverage it again. But many of them don't even own a home, believe it or not, because they look at the owning a home as being a ridiculous use of their money. I've seen that. I had a couple clients with that mentality, multi-millionaire, billionaires, and they didn't even own their own home because they thought that was silly because they value money. It's a mentality that, frankly, most of us need to learn from. The time is right now, though, for a better way for lots of reasons. Not only do we have a solution, but it's also the time in our history. Listen, today there's more stress over debt. Can we pay our bills? What's going to happen after COVID? More people are worried about paying the bills than they are about dying from COVID. Trust me when I tell you. There's no relief when you have creditors to pay. We might be seeing some, for deferments and stuff like that, but there's no such thing as a free lunch. Nobody's going to forgive your debt, no matter what kind of rumors you're hearing out there. There's no forgiveness of that debt. And so it's very important that we look at the debt and try to get rid of it as fast as we possibly can. But I have a question, how stressed would the world be if we didn't have any debt? Like in the old days, right? You would carry your debt for a few years and then you're debt free. It'd be a whole different life, a whole lot more sitting out on the front porch talking to neighbors, I can tell you that. But there's more to it. Mortgage debt in America today is $16.3 trillion. It's probably higher with this boom taking place. But as of the time we put these slides together, 16.3 trillion. Credit card debt in America today is 1.1 trillion. In fact, it averages almost $7,000 per person. Student loan debt today is 1.7 trillion. I personally, that's a sore topic for me. I think it's like predatory lending, right? In fact, 70% of our graduates have student loan debt. Long gone are the days where we, slowly went to school and worked, right? The average student loan debt is almost $47,000. What a travesty that we have our young people getting out of college and they already have, $50,000 basically of debt, more than a lot of us even paid for homes in the old days, right? $260 billion of student loan debt is being held by or paid for by people over the age of 50. And you know what? No. Most of those people didn't go back to school in their 40s. Most of those people are still carrying the original student loan debt because they can't figure out how to get out of it. In fact, nearly 40% of borrowers age 65, 65 and older, are in default on student loan debts they took out 40 years ago. Listen, something's got to change. There's something wrong with that, right? We've had a healthy economy until COVID hit. It was pretty healthy, right? But I have to tell you, this is not a sky is falling call, but we're teetering on disaster as a nation, as individuals. Foreclosures are climbing again. You might see the markets booming tomorrow. That's great. Good for them. But the foreclosure rate has been climbing for almost 2 years now. We're not building wealth. We haven't built wealth for a very long time. Again, we're credit score, can I afford the payment kind of people. We're not building wealth. We've learned to be content if we're just able to pay our bills, go to work, get a check, pay the bills. And I'll tell you one thing, that is no way to live. You might be glad you got the job and you pay your bills, but think about that for the rest of your life. That's just go to work, get a check, pay the bills. 10,000 people a day are turning 65 years old, and that pattern's going to continue for the next like 13, 14 years from now. So a lot of people, hitting retirement age and frankly can't retire. They still have debt, and a lot of them, have less than $30,000 retire on. You certainly aren't going to retire in America on $30,000, and you're not going to be able to do that if you have debt. There's an added benefit to my expertise in the auction business, and one is that we just kind of get trained to put our hand on the pulse. We look for things, signs of things, of distress, if you will. And so, we are able to see trouble, if you will, long before it comes down the pipe. It doesn't take a crystal ball. It just takes a keen eye for signs and what to look for. And I can tell you one thing, with $16.3 trillion in consumer debt and our recent toll on the economy through, because of this whole COVID thing, it's time to focus on getting out of debt. You need to get out of debt. Your family needs to get out of debt. We all need to get out of debt for a number of reasons. And I'm going to show you how to do that in just a minute and how you can build wealth beyond that. But the first thing, let's start at the beginning here. Where did the mattress money go? Okay. Some of you are too young to know what I'm talking about, but we used to save for things that we wanted or needed to buy. Maybe it was a mattress, maybe it was a cookie jar, maybe it was a shoebox under the bed, right? But we used to save for things, and frankly, it was pretty rewarding. When you look forward to that vacation or whatever it was, a new bicycle, whatever it was, we used to save for things that we wanted to buy. We used to have emergency funds set aside. That's where that whole rainy day thing came from, right? Had a little bit of money stashed just in case. But you know what? Sadly, today, the average American has less than $1,000 in savings, and they turn to borrowed money instead. So they don't think they need mattress money, because as long as they got a little or a little room on a credit card, they think they have emergency funds covered. But it's not about borrowing money for emergencies, right? It has become the American way, sadly enough. Boy, I'll tell you, in real estate, you can see this more often than not. But people buy things we don't need with money we don't have to impress people we don't even know. I've told the story so many times about, really McMansions, going into McMansions when I was working with a food pantry, and you wouldn't believe how many of them had no furniture. It's like, hey, look at the house, don't come inside. That's the way we live, to impress people. But the other side of that, I believe, is that we have, just gotten accustomed to immediate gratification. We don't want the mattress money. We don't want the pain of saving. We don't want to wait. We want it right now. I want it right now. I want to go on vacation. I don't care if we go into debt. We're going to have Christmas. I don't care if we go into debt. And the result of that is a whole lot of debt and the wrong kind of mentality to be out of debt and to build wealth. So what does it look like today? Well, in 2020 so far, the median home price is $320,000. The average new car price is almost $37,000. The average credit card debt per person, again, is almost $7,000. In most situations, over 50% of our payments are actually going toward interest alone. Listen, if you wonder why there's a bank on every corner, this is why, right? Because more than 50% on the average for us, our payments are going to interest. Well, is there any wonder we don't know how to get out of debt when 50% of it's going just to do thank you check to the bank for loaning us the money in the first place? So that's why our debt is outliving us instead of the other way around. I want you to look at this today. I think if you love America, no matter who you're voting for in just a couple of weeks, this is what our debt looks like today. And I think as Americans, I don't think we can ignore this anymore. I think we need to do our part to make things better for, beginning in our own homes and going on beyond. So this is what the debt looks like, a live clock in America today. Something's got to change, right? We've become a society that bases financial decisions on whether or not we can afford that payment instead of the amount of the total debt. That used to be a joke in the car business, right? Don't show me the sticker on the window, just show me what my payment's going to be. And that's the way we're buying everything, including houses. Nobody really cares what it's going to cost them as long as I can afford the payment. That's the danger, and that's the frenzy, frankly, behind the real estate, craziness that's going on right now. People are looking at, wow, honey, we can buy $1 million home, but we can afford the payment. That's not the point. The point is how much debt is there. So no wonder we have a problem. We start looking at not the bottom line, but can I afford the payment? And we fall into that minimum payment trap. Our idea of paying off debt, as I talk to people almost every day about debt, their idea of that is, will I make the minimum payment plus a little bit extra? Well, you're not going to get anywhere that way. If, on the average, 50% of what you're paying is actually interest, you're not really digging to the bottom line or not at all. So really, that's why people go out and try to get another credit card, get an extended credit card, do whatever they can to get some more plastic to float the day. So no wonder we can't seem to get out of debt until now. We simply don't understand what it takes to get there. But debt isn't the real problem. It's not a bad thing to have debt. I'm a woman of faith. It's not a sin to have debt. Now, debt is it should be used as a vehicle, though, to purchase our homes and our cars, and unfortunately, sometimes our education. It's just a vehicle. So we have to get that wealth mentality going, right? But having debt is one thing. Hanging on to it well past where we need to is a whole different story. Just give me as long as you got so I can squeeze into that payment. That's got to stop. You see student loan debt going into retirement. Every debt you have can do that if you're not careful. So I want to break it down just a little bit for you. First thing is credit cards. Wow, wow, wow. You get a credit card, any color, any bank, any kind. You can get your picture on it. You can do whatever you want with it. It's a card for all occasions, all kinds of shapes and sizes. But where did that all begin? It seems like credit cards were around forever, right? But that's not true. The first credit card was actually born, if you will, in 1950. It was a diners club. And really what inspired that card is that a man took his wife out to dinner in Manhattan, and he didn't have enough cash to pay the bill. He was mortified. They figured that out and pulled it together. They didn't have to wash dishes, but he decided he would come up with like an entertainment card. And so he got a lot of restaurants, establishments to be part of this diners club. And then you could be a member and pay 7% interest, pay it off in 30 days, and never get stuck not being able to pay for your date. So it was like a date card. It wasn't meant to stretch it out for the next 10 years. Then it didn't take long. Bank of America says, ooh, we're going to do this revolving credit thing, right? And then, of course, American Express followed. And today, the rest is history. We've got one for every single need, every single balance, you name it. It's become a nightmare where we're borrowing just to live our lives. Another side of this, and having, been there where I had my life annihilated financially, I know this is true, where people prey on people with bad credit, everything from higher insurance rates to those credit cards. But ironically, what's interesting is people can, have their lives financially annihilated, lose everything, get bad credit, whatever, and they can't wait to get back in the game. And so there's all these, credit card companies that will prey on that. The highest historical credit card rate was First Premier, and it was 79.9% interest. Can you even believe it? That card's no longer available, but you know what? If it was available, I guarantee you people still going for it, just trying to get back into that borrowing game again. The highest current credit card rate today is 36%, also from First Premier, and there's all kinds of enrollment fees, renewal fees, and everything else stuck to it, but 36.6%. People can't wait to get back into that charge game again. Now, how sad is that? What's the average credit card rate today? Well, it's 17.99. That's not so bad when you look at it on the surface, right? When I share with you what I'm going to share, it doesn't really matter what that interest rate is because we're going to attack the interest. But, the interesting thing here is that's the highest rate recorded since 1994. So it's actually, going up, right? Now, let's talk about the one I love to talk about. And that's a 0% credit card. Fascinating. In the auction business, a lot of people don't realize that 99% of what we do is marketing. So we kind of have this antenna for, good spend. That's basically what it is. So when you see a 0% credit card, it is so enticing, isn't it? Wow, so exciting, honey. Let's get that 0% card. And it's crazy not to take advantage of that 0% financing, right? Well, kind of, sort of, because there's no such thing, again, as a free lunch. Lenders bank on you spending freely because there's no interest. You see, lenders actually pulled together, put millions of dollars into a consumer study to see what would the reaction be to a 0% credit card. Why? Have you ever questioned why would they do that? Well, the reason is because they know you're going to use it over and over again. It's like a false sense of security, if you will, that it's 0%, not your 17.99, right? So a lot of people will transfer other, balances over to the 0%. And before you know it, every time you go out, you're saying, hey, honey, use that 0% card. And I'll tell you, the thing blows up, right? So the truth and the reality is that people with 0% credit card, 88% of those people don't pay off that balance, within that incentive period. So they gave you a year, for instance. Most people don't do it. They have racked up so much debt on that 0% credit card that they can't get it paid off. And you know what? The small print for a lot of those credit card companies says that if you don't pay off during that incentive period, they'll charge you interest retroactively back to day one. So I'll tell you, it's not good for you. It's really good for them. And so when you think, wow, it sounds too good to be true, it probably is. That 0% will bite you every time. And then we look at the truth about mortgages. I'm not going to stay on this too long, but mortgages, should not be a life sentence, guys. It shouldn't be the rest of my life. The average age of the buyers today, set aside the first-time home buyers, is 56 years old. and most of them are going for a 30-year mortgage. I hope they live that long. But it shouldn't be a life sentence. It should be like it was in the old days. Yeah, we need a mortgage because we want a home, but don't leverage it out and create a life sentence. And remember, as Isaac Newton said, whatever goes up must come down. And so you're going to see that in real estate. If that were not the case, my old farmhouse would be worth billions of dollars. And the real estate market climbs. It's climbing now. People are overspending for their homes today, and they need to consider that equitable position. I heard a realtor say the other day, well, it's okay. If you stick around for 15, 20 years, it'll all work itself out. That's not music to your ears if you need to sell in that time, or if you pass away during that time, right? What goes up is going to come down. People have always borrowed money to buy houses. I mean, I'm sure probably back to, to the beginning of time, but landowners would hold a note for properties they sold, and there were terms, of course, but the biggest difference was that the buyer didn't sleep until they paid off that debt. This was our home, right? We had to put a roof over our head. We had to stay put and pay off that debt. And people really, used to burn their mortgages. They were so excited when they paid off that debt. They'd have a party and they'd burn it. In fact, one of my favorite things to sell in the auction business were the historic homes. I just love those things. But a great thing about that is, it was tradition back in the old days. Once you paid off your mortgage, you put a finial, put something beautiful on the staircase to your home. So when your friends and family walked in, it was a statement that we owe nobody anything. And so that has kind of gone by the wayside, right? But people used to celebrate that. Until a property is paid in full, folks, you do not own that property. And I know we like to say, I own my own home. No, you don't own anything. Till you pay it off, you and the bank own it. And if you question that, just see a month or two and you can't make that payment, they'll be happy to remind you. Listen, mortgages, they weren't always 30-year, low interest, life sentence mortgages. Again, back in the old days, right around, the 1930s, there were short-term loans, 5 to 7 years. And basically people put 50% down of the total value of the home and paid it off in 5 to 7 years. Now, you might be saying, well, that's ridiculous. What did houses cost back then? Doesn't really matter. What were wages back then? Back then, it was just as big a deal to those homeowners as yours is for you today. But they figured out how to, get out of that thing fast. And believe it or not, it's possible for you. You might just be able to get out of yours within 5 to 7 years. So how did we get here? Well, again, the Great Depression happened, and, mortgage people couldn't afford to buy anything, and banks couldn't lend anything. So the New Deal is what Roosevelt struck out there. And, it was a way to boost the economy, basically, right? They softened up regulations, got more people in the game. And so consumer spending was stimulated, and frankly, it worked. But we saw that happen again, years later in the 1990s when interest rates went off the charts for real estate and went up to 20%. I'm not proud to tell you I had a home at 18% way back then. Can you even imagine? But what happened was, as interest rates got in the way of spending, right? And so President Clinton said, lighten everything up, and we need to increase American home ownership to 70%. Big mistake. And so the subprime mortgage industry went crazy. And what happened was, as long as you could pass a breath test, then they gave you a mortgage. And, so many people were not qualified to buy anything, much less to buy a home. We created that problem by lightening that up. So that wasn't the answer either. Listen, I've been in real estate long enough. I know what we tell you, and forgive me, realtor friends out there, for saying this, but we tell you, you need a mortgage so you can have a tax write-off. Come on, guys. No, you don't. You need a mortgage because most of you can't pay cash for your home, or if you have cash, you want to leverage that a little bit, right? You do not need a mortgage just for a small tax write-off. There are plenty of other means for that, from having a home-based business to owning a rental property. And here's a novel concept: give it to charity or give it to your church. You do not need a mortgage just to have a tax write-off. So we need to get that out of the way. You need to get the mortgage paid off. If you didn't have a mortgage, would you give more? If you didn't have a mortgage, would you more go to your church? Would you travel more? Maybe you'd invest more. Would you leverage it and buy more properties like the wealthy folks do, right? Would you get a rental property or two? If you didn't have that mortgage, you got a whole lot of options. So don't buy into that you need to hang on to your mortgage like a long lost friend because you need a tax write-off. And if you need a tax write-off, you call me and I'll tell you what you can use. I saw this article. In fact, I wrote a blog about it, and I was so excited because this church in Houston, got all their debt paid off. They had racked up this, 16 million, I think it was, in debt to build their new facility. And one day the pastor said, we got a problem with it. We should never have done this. Let's get this paid for. So today, this church, after they got rid of their debt, they give 50% outside the church, to the needs. And that's the way it used to be, folks. If not for the church during the Great Depression, people would have started starve to death. So debt is in a way of us doing lots of pretty cool things. I've been to a lot of closings. I'm very blessed in my auction career. I had 5,000 transactions. That's just like crazy unheard of. And I can tell you, so I'm an expert at this. I can tell you, when you go to closing, you know, we're by law, you're supposed to get an amortization schedule. You're supposed to be able to see, you know, what all the expenses are going to be, right? And so, you know, we do that. But you know what? Nobody looks at it. They just got to say, well, we don't really care. What we care about is what the payment is. Again, we've got that payment mentality. As long as that payment works in our budget, we don't really care how much we're going to pay for that home. So in this case, you know, $320,000 home, if you were able to get 2.9% interest, you're actually going to be paying almost $500,000 on that property, just in that little tiny interest rate, right? And so you know that the loans are what we call front loaded. So the bank's saying, we know you're probably going to move in 7 to 2 years, so we want as much money as we can get on that loan on the front end, and you don't even begin to address principal until you're years into that loan. So we're going to change that for you if you want to. The concept isn't new, by the way. And last thing I'm going to bore you with about the auction business, and that is that years ago, I was on the board for the National Association of Realtors, and we were hearing about all these auctions happen in Australia. It was pretty amazing. You know, like they were telling us 90% of their sellers went to auction first instead of as a last resort. And so we called some of those auctioneers over to the US to learn from them. You know, we really thought that it was the way they were marketing, a more progressive minded buyers. You know, that's what we thought it was, but we were put in our place. It wasn't that at all. It said in Australia, they used what they called a one account. It was a pretty primitive system, you know, in terms of, you know, basically being a paper system, and it addressed just their mortgage debt, but it showed them how they can get rid of some of that interest. When you get rid of the interest, folks, you can make do some serious damage on the principal. So most of these people had worked with the one account, and they didn't have a mortgage at all, or they had a very little mortgage. And again, you got a lot of options if you can address that mortgage. That one account, if you will, looks a whole lot different today. The founders of our company went to Australia and around it a couple other places to look at what were other people doing to get rid of debt. And so it's been reinvented, if you will. $19 million went into the redesign to, you know, come up with a complex algorithms that can help us all figure this all out. But also, our system doesn't just address mortgage debt, doesn't address just one mortgage, and it addresses any kind of consumer debt whatsoever. And so the best way, the easiest way for me to at least give you a snapshot of what we're talking about tonight is to ask you to watch this very short. It's a 2-minute video. So put your seatbelt on. I'll be right back.
Meet Jane and Katie. They both owe $300,000 on a 30-year mortgage with the same interest rate and the same monthly payment. They have the same exact debts, the same monthly expenses, and they both earn the same amount of money. Everything's the same. Weird. But Jane knows about something that Katie doesn't. Jane is taking advantage of a smart online program that helps consumers pay off all their debt, including up to a 30-year mortgage in as little as 5 to 7 years, without changing their current budget. And on top of that, this program helps consumers to convert the money they save into wealth. Thanks to this program called the Money Max account, Jane will now have all of her debt, including her 30-year mortgage, paid off in as little as 5 years, which is 25 years sooner than Katie. And Jane is going to save over $144,000 in interest compared to how much Katie's going to pay on the same exact mortgage. And thanks to the 25 years of payments that Jane no longer has to pay toward debt, this program could help her to convert those canceled debt payments into potentially over $1 million in tax-free income in far less time than it will take Katie to just pay off her 30-year mortgage. So while Katie is paying mortgage interest, Jane's building a huge nest egg. While Katie's mortgage payment is taking a big chunk out of her monthly budget, Jane's eliminated her mortgage and all the rest of her debt in as little as 5 years. And while Jane's thinking about all the ways she might spend the possible $1 million in tax-free income, Katie is, making mortgage payments. Oh, and Jane and her husband are making plans to retire early. So ask yourself, what do you want to be doing in 10 years? Paying for your house or seeing the world? We thought so. To learn how quickly you can become completely debt-free and building wealth with this amazing program, simply fill out the contact form on this page, and we'll rush this debt elimination and wealth creation information to you right away.
So there you go, guys. Two-minute video, and what you're seeing here. Now remember, don't miss this. The only difference, they had the same income, they bought the same amount of house, right? And one was able to get rid of her debt so quickly. That's what happens when you put complex algorithms to work for you to help you get rid of as much interest as you can. So I want you to think about that for just a second, your own situation. Do not get caught up in the numbers. You might say, well, $300,000, I have a $80,000 mortgage, I have an $8 million. It doesn't really matter. It doesn't matter how small or how large your mortgage is. It doesn't matter if you have one mortgage or multiple mortgages. It doesn't matter if you have one credit card or 12 credit cards or 20 credit cards. It doesn't matter if you owe 10,000 in student loan debt or 100,000 in student loan debt, or yes, I've even heard $1 million in student loan debt. It doesn't matter. So don't get caught up in the numbers. As long as you have more money coming in and going out, this system can work amazing things for you. And it can determine the exact month and the exact year that you'll be completely out of debt. And I guarantee it'd be a fraction of the time. So don't get caught up in the numbers and try to put that to work for you. Listen, there are other things out there. We know that, for heaven's sake. We've got Dave Ramsey, Tony Robbins, Susie Orman, and a lot of DIY Excel spreadsheet folks. But the bottom line is, why would you choose to go like that one account I explained to you in the auction business, the old paper way? Who in their right mind would leave Washington, D.C. and drive to San Diego using an old paper map today when you have the benefit of algorithms with a GPS system? Nobody. That'd be crazy, because we know that the GPS is going to anticipate things that we need to do to, avoid delays or detours or whatever. That's the way it is with your financing too. So many people, including the ones on this list, do a fabulous job, but they're doing it the snail's pace way, the old paper way, when you could be letting the algorithm show you the quickest way to zero almost overnight. Listen, we're real proud of what we do. I don't have an up-to-date number here on the left side of the screen, but so far we've helped eliminate over $2 billion in consumer debt. We are very proud of that. This is what we do day in and day out, is to help people get rid of their debt. And also, just in case you haven't heard of us before or heard of the program before, I just want you to know that 15, 16 years ago, we won the Ernst & Young Entrepreneur of the Year Award. That, if you don't know anything about that, you need to look it up. It's quite an honor. You get a lot of scrutiny goes into that award, and we are so, so proud that we earned it so many years ago. So here's the moral of the story. If you make it your mission to eliminate your debt, and I'm talking about all of it, right? Doesn't mean you can't leverage and get another property. Doesn't mean you're going to be eating beans and rice. Just, it means that you make it your mission to eliminate all your debt using, hopefully, what we're showing to you tonight, without borrowing more money, regardless of your credit score, without changing your lifestyle, living again with rice and beans. Then that's when you can leverage your money that you're not spending to build true wealth. And, or you can travel like you've always wanted to travel, or, you can fund your grandchildren's college funds, or you can give more money to your church or charity. The possibilities are absolutely endless. Guys, there is a way to get out of this thing without winning the lottery and without that windfall you just thought you needed until tonight. So which one are you? You want to get rid of all your debt once and for all? That's me, by the way. You want true financial freedom. You want to give more or travel more or leave a legacy for your family instead of a big pile of debt for them to try to figure out. Or you want to dramatically pay down your debt so that you can leverage a portion of your ownership interest into an investment property or two or three. You may not even know until tonight that you do have everything it takes to build a real estate portfolio. It's not how much money you have, it's how you use what you already have. So which one are you? Listen, I'm passionate. If you can't tell that by now, there's something wrong. I am very passionate about this. Why? Because I know it doesn't have to be this way. It's so ridiculous. I'm very blessed. My dad grew up in the Great Depression. I know it wasn't this way. It's not supposed to be the way it is, because I know a better way. And I have a solution to that problem because I've been there and done that. I know what it is to pace the floor. Let me tell you, one mishap, you'd be pacing the floor too. And so we need to get that monkey out of the way once and for all, because I believe that the bondage of debt, and yes, it's bondage, needs to be broken as soon as possible, because I believe when we get a handle on debt, we can give a whole lot more. And that's my passion, is to be able to give a whole lot more, because there's more to life, guys, than just laboring away, to pay off your debt. Go to work, get a check, pay the bills. There's more to life than that. What kind of life is that? And so we need to, change the way we think, because financial freedom building wealth. It's possible for my family, for my friends, if they, as long as they understand that they don't necessarily need more money, a windfall, or to win the lottery. They just need less debt, and we've got the solution for that. Luke 12:48 in the Bible says, "To whom much is given, much will be required." And I tell you one thing, it's not possible, humanly possible, for me to list out all the blessings and gifts in my life. I had to have twice the lifetime I have just to name them all, right? In this particular case, I have the gift of knowledge. I've been there, done that. I have a solution, and I'm passionate. I want to share it with as many people as I possibly can. And again, I have the expertise, if you will, to understand the challenges in our world today. I have seen the financially devastating side of life for myself and in the auction business. And don't think for a second it couldn't happen to you. And because I'm honored and obligated to share, I believe when you have something, you're supposed to share it. And that's what I'm doing with you tonight. So $64 question is, are you compelled to make changes? What you do with what I share with you, again, is your choice. You can sit back and continue to embrace your debt like a long lost friend. You just remember you've been conditioned to think of it that way. You can continue to be content, just going to work, pay the bills, and whatever until the day you die. You can keep using a paper map and blow off a GPS system to reach your final destination. And you can be a willing victim. And yep, you're a willing victim when you look at the system we use today, a one-sided banking system. You can be and make the choice to be that willing victim forever and ever. Amen. But you just understand this. And is your family, the next generation, is going to follow your lead. So if you want more out of life than just go to work, get a check, pay the bills, and being part of that one-sided system, you need to do something for the sake of the next generation. Or you know what? You can take a closer look at the fastest way to zero. That's what a GPS will do. Almost as fast as you put your destination in a GPS in your car, our complex algorithms will come up with, showing you when you can see your financial freedom or build wealth, whatever your goal is, right? You'll know the exact month and date. All that's going to happen. It's pretty exciting stuff. I want you to remember something. Einstein said that the definition of insanity is to continue doing the same thing over and over again while expecting a different result. So if you aren't where you want to be, where you thought you'd be, where you plan to be, if you want to be financially free or build that portfolio or fund the education for your grandkids, whatever floats your boat, if you're not there and that's where you want to be, and you get out of debt and build wealth, something needs to change. The way you're doing it, yeah, you might be good and on time with your bills, but you're not going to accomplish those things most likely without a windfall unless you do something before it's too late. It's true. It's time to understand compound interest. Again, that was at almost 50%, or the average 50% for all of us going toward interest, right? Albert Einstein also said compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. And that's the problem, folks. We keep paying it month after month and year after year. Listen, we're on a crusade. This company and these great people and myself, we're on a crusade to make a difference. Our slogan is buying back America, one family at a time. And I can speak for my family, I tell you that. You cut us, we're going to bleed red, white, and blue. When I show you the debt clock, that's a real thing in my heart. We want to make a difference. My dad served in World War II. My ex-husband in Vietnam War. My two sons, the War on Freedom. We are a patriotic family, okay? Now, I may not be able to go out and do what the rest of them have done or currently serve today, right? But I can do this. I can do it as long as there's breath in my body to wake people up that it doesn't have to be this way. And we can buy back America one family at a time. So are you intrigued? I sure hope so. I can't imagine if you aren't. If you open that mind up and you stayed with me for this time, I would imagine you are pretty intrigued. It's a very simple process. Listen, we don't want a pint of blood in your firstborn. We just want you to work with us for us to be able to, see what's possible for you. How fast can you be out of debt? How fast can you pay down your debt so you can leverage into something else? It's a simple process. It's painless. Nobody's checking your credit. Nobody's getting access to your accounts. But you don't know what you're saying no to.